Hey everybody, it's me, Gregory Mannarino. Yes, here we go again. Another segment of this lovely Saturday markets look ahead. You know, there are so many moving parts to this, but I believe in something that I have been saying for quite a long time. Right now, the only thing that matters, and I'll put another perspective on this as we move forward here, is the 10-year yield. I think everything right now is revolving around what the 10-year yield does. And I've covered this in the last one of these segments, last Saturday, and the one before that. It's really the truth. So look, stocks this week did almost nothing. That's the truth. This coming week, again, there are so many moving parts to this, geopolitical issues, all kinds of things. So we do have to consider that. But if we boil it all down to what matters, it's where cash is going to go. It's that simple, honestly. Now, you do realize, if you follow this blog, that we've seen some extraordinary effort being put into keeping rates suppressed. Every single time bonds start to sell off, well, guess what? It just reverses. Some mysterious entity gets in here, starts buying these things up like crazy, and it's just a repetitive thing over and over and over again. Now, what also has been going on here is the dollar. The dollar has been on a pretty significant uptrend, and we're going to look at some charts in just a few seconds. That's a problem. That means that an even greater effort has to be made to get in here and suppress rates. You understand? There's a compensatory mechanism going on. Now, with that said, what we're going to do right now is go over to my website together, you and me. In the description of this video is a link to my website, traderschoice.net. I want you to click on that. I'm going to meet you over on my website. Well, if you happen to be on my website right now, let's play around a little bit. All right, my lovely, lovely friends. Look straight down below this video. You will see my swing trading chart. This is ticker SPY. It's already in here for you. The ETF that tracks the S&P 500. What do we notice right off the bat? Screaming uptrend. I mean, again, this is the mechanism here. Keeping rates suppressed creates an environment of risk. Cash flows into the stock market, like I explained to you. Now look over here at the bond market chart. An incredible effort is going on here to buy up those bonds, keep rates suppressed. That's how it works. Now look just below the bond market chart. You got the dollar ETF. Took a pretty big hit over the past day. Is this going to continue? That depends on geopolitical events. Every time there's some kind of a negative event, the dollar has been getting stronger. Now, we understand the Fed don't like it, the president doesn't like it, they need the dollar weak. Stronger dollar is not good for companies based here in the United States that are involved in international trade. So, got to keep that dollar weak. Stronger dollar means they got to get in here and prop up that bond market even harder to maintain the environment of risk. It's very simple. Now, let's look at a few other things. Let's go straight down here again to my chart here, the swing trading chart. I want you to put in ticker GLD. All right, this is the ETF, which tracks gold. What do you notice about this? Something I've been covering. I mean, it's in a ripping downtrend. A lot of this, well, we know the mechanism behind this. This is not real. You have to understand that. Paper derivatives. Why this even exists, I think you get it, is to string along the price action of gold and or silver. Let's put in silver here. SLV. SLV. Enter. Same thing. The dollar has a lot to do with this, because these things are priced in dollars. You know that. So, stronger dollar, weaker commodity prices. All commodities are priced in dollars. But again, the mechanism here is just off the freaking Richter scale. It's so fake. It is so not real. We know who the main players are. I mean, it's common knowledge. And I sincerely wish our president would do something about it, but he will not. He will turn a blind eye to this. He'll never talk about it. Just won't happen here. And, just real quick, since yesterday, I got hammered again, and I love you guys and girls, I really do, with questions regarding President Trump wanting to, instead of having companies report 4 times a year, have them only report twice. I think it's the worst idea I've ever heard, sincerely. Anytime there is a restriction of public information, because that's what this would be, restrict public information on publicly traded companies, this is not a good thing, and you really have to look underneath and say what's happening. Why would the president want to do this? I think his efforts would be much better spent trying to figure out the rigging here or expose it. Couldn't possibly be easier for him. The rigging in the paper gold and silver markets is out of freaking control. It really, really is. Now, before I get sidetracked, let's go to the bottom of this page here and look at this gauge here. This gauge here has been so accurate, it's frightening. It's the truth here. This is the technical analysis for SPX. This is the S&P 500. It's pointing towards a strong buy here. Now, again, the mechanism we understand. Keep rates suppressed. At all costs, do whatever you got to do, and cash will flow into the stock market. So this gauge here may very well be correct. Now, with that said, this, in my opinion, is really a stock picker's market right now. It's very difficult to trade an index in this environment where everything is just not real. So you can, I think here, if you look at my swing trading chart, you see those 9 companies here. I follow these companies. I read their reports every quarter. You can trade individual companies. As a matter of fact, I've been posting all of my positions at the moment I open them on Twitter, at least on Twitter, Facebook. I think I'm going to start posting them exclusively on Twitter. It's a pain in the butt for me to kind of post these things all over the place. So if you do not follow me on Twitter, please do that. At Greg Mannarino. It's very simple. A lot of people follow my work there. I post everything there. So get on there as well, and we'll try to make this work moving forward. So let's just summarize real quick. It's all about the 10-year yield. It's all about interest rate suppression. Nothing else matters. I mean, even geopolitical things don't matter. This thing with Turkey, it's not gone. As a matter of fact, they're talking about new sanctions. The European debt crisis, it's not gone either. You don't hear about it. It's a media blackout. The German banks are in a lot of trouble. Gone. You don't hear about that. So if they could control the narrative, meaning, not allow people to actually see what's going on here, restrict information like President Trump wants to do with these reports going to twice a year instead of 4, stocks are going to move higher. I've never seen a president more obsessed with the stock market in my entire life than this guy. Anyway, it's the illusion. Keep the illusion real. If the stock market is moving higher, then everything just must be great. This is how people figure it out, because they don't know how to walk and chew gum. At the same time, most people, it's the truth, and I'm going to sit here and say it publicly. Anyway, with that said, let's see how this plays out this week, and I will do my updates twice a day, Monday through Friday, so we can keep on top of this. So I hope you found this instructive or something. All right, with that said, I will see you Monday. Take care.